Well, you had to get very defensive because, of course, it was inevitable that with all the disruption of production and supply chains, there would be a financial crisis of some sort. And in March it struck, and it was very severe. It extended right into even the US Treasury market briefly. So there were two things to say. Number one, you have to be ready and very defensive for this shock, because at some point everybody's going to wake up to the reality. And the second thing, of course, well, what will the authorities do under these conditions? And again, I think it was important to realize that if you were sitting at the Fed or at the Treasury, this may not have been a financial crisis, but it looked a lot like one by March. And so it wasn't difficult to predict that there would be very quickly quantitative easing infinity, a big expansion of the Fed balance sheet, as well, of course, as a great deal of spending, the CARES Act, which was very hastily improvised. So my sense was that there would be this temporary, very sharp shock of panic when people realized that this really was a global pandemic. And then a great fire hose of fiscal and monetary support would be turned on, rather as had been done in 2008, 2009, only on an even larger scale, because many people from that period had concluded we didn't do enough. So that was, again, a matter of applying history and trying to figure out how sustained that reflation would be. And it's not difficult when the Fed is signaling zero rates as far as the eye can see to anticipate rapid appreciation of financial assets. There were a few tricky questions, like, was gold a better bet than Bitcoin when things really were ugly? That wasn't an immediately easy question to answer. But the broad outlook was clear. Well, the answer was that Bitcoin was a much better bet than gold. And that wasn't immediately obvious. At first, they actually behaved rather similarly. I mean, everything sold off at that moment in March. But Bitcoin took off and gold did not in the rest of 2020. And so if you believed, as I do, that Bitcoin is a kind of digital gold, or maybe technically an option on digital gold, it was actually a better thing to hold in your portfolio than gold over 2020 as a whole. Well, first, Consuelo, credit where it's due. One of the beauties of Greenmantle is that I get to have conversations with people like Matt McLennan, and it was actually in conversation with him that the idea of an option on digital gold came up, because I've been asking, is this digital gold? And Matt said, think of it as an option on digital gold and it'll behave much more like an option. This was a brilliant insight. And I remember incorporating it into a new edition of my book, The Ascent of Money, back in 2018. So the question of what is Bitcoin or what is cryptocurrency has been around now since the financial crisis. Let's not forget the original paper that explained Bitcoin, the Satoshi paper, was published in 2008, the same year that Lehman blew up. And my initial response, I remember, was a kind of fuddy-duddy, old professor type response. This is not a credible challenge to existing payment systems. Don't even talk to me about this as money. And that was my response to my teenage son, another person whose opinion I greatly respect. But by the time we got to 2017, and he'd been nagging me for some years about it, I had to rethink my view. And I rethought it in a couple of ways. First, it's probably a mistake to think of Bitcoin as money. At least it might become money, but it's not money yet. But what it certainly can be is a kind of digital asset. And the same was true of Ethereum and other digital currencies that were being added to the ecosystem at that time. If you look back in history and asked, what is this like? Which is always my question. What's this like? It was a bit like the early days of equity finance. In 2017, people were using initial coin offerings, kind of the way the early equity issuers were using stocks to raise money in ways that were novel and quick and not encumbered with regulation. So my first take on crypto was, this is just a kind of new way of raising money. And in that sense, it's like the experiments with the early equity companies that produced the bubbles, the famous Mississippi and South Sea bubbles. So it was obvious, A, that you were going to get bubbles, because that's kind of part of financial innovation, but B, that something would survive when the bubble burst. And my guess was that although there would be this bust, that Bitcoin and other tokens, particularly Ethereum, would survive. and it would be a mistake to expect them to go to zero. Now, some, including some friends of mine, some people argued it's all going to zero. Bitcoin is expletive coin. I thought that was wrong, and my sense was that financial history tells you it's an evolutionary process. There are a lot of things that go extinct, but innovation ultimately will produce some survivors, and those survivors will then become really very important. So we saw that in 2020, in a moment of total panic, when it seemed as if not only the financial system, but potentially the international trading system would break down in the pandemic. A great many people, especially in countries with somewhat rickety banking systems, turned to crypto. And this adoption process, where people say, look, I should have at least some percentage of my portfolio in this, even if it's only 0.2%. My prediction in 2018 was that adoption process will drive the Bitcoin price up. If it's 0.2% of the portfolio of every millionaire in the world, then you're on $15,000 of Bitcoin. And if it's 1%, then it's 75,000. And that gives you a range, I think, of roughly where things have gone in the past year.